So do you guys want to make safe, consistent income in the stock market with one of the most simple and easy strategies out there? I'm going to show you how to do that today, guys. And it's called a covered call. A lot of you guys have probably already heard this. It is a fantastic way of bringing in safe, consistent income on a weekly and monthly basis. And you can put your current shares to work to bring this income for you. The way I like to look at it with a covered call is it's the same thing as having a rental property. You're using your stocks and your shares to create that stream of income just like you would if you had a bunch of rental properties in real estate. Today we're going to start off and I'm going to basically show you what a covered call is. I'm going to give you examples on stocks and tickers to trade it on, and basically how to set it up and how I like to trade them. So what is a covered call? A covered call is basically, to sum it up in a very simplistic term, is you are going to select a price that you want to sell your shares at, and you get paid for doing that. So you're going to get paid for literally trying to sell your shares at a price that you want to sell them at. That's the beauty of it. You don't have to sell them at prices that you don't want to. But you may think, what is the downsides to this? Well, I'm going to show you now. What we can see here, this is an example of a covered call on Marathon Digital. Now, what we can see here is if we were to sell a covered call at the 35 strike, so basically what we're saying is, okay, I will sell my shares at $35 and I will sell them on March 15th, exactly a month out. So you're saying you're going to sell them at 35, but the current price is 27. All right. So what you're seeing here is the max profit is $1,000. You cannot make more than the strike price that you select. So if you were to drag this up, let's say you wanted to sell your shares at 40, you're selecting that you're going to sell them at 40 and you're actually getting paid for this $180 to say that you will sell your Marathon Digital shares at $40. Basically, right now you can see it's at 27.23 per share right now. So if you want to sell them at 30, you can still make $637 if you're forced to sell your shares at this price. However, by clicking at this and having a look, you're getting paid $360 to try and sell your shares at a profit. That can pretty much be a no-brainer to me, to be honest with you. That is an absolute fantastic return. In my opinion, in this market, if you're able to make 1% every 2 weeks, that is a phenomenal return. That is a phenomenal safe return. So what would it actually look like entering this trade? So let's say you own 100 shares of Marathon Digital, and then you decided right now it's time that you want to pick a price that you want to sell these shares at. Well, you can come into your table here. You can just pick any date that you would like to sell your shares at. So let's say I want to sell them a month out. On the call side, you can see all the premiums here and what they're paying you to sell them on this date. So the further out in time that you go, the more these will pay, because as we know in options, it all works through theta decay and time decay, which basically means the closer to expiration the option gets, the less and less it's going to be worth if it's out of the money. For this example, it will go 35 days out. And let's say I wanted to sell my Marathon Digital shares at $40. Well, right now, if I click here, I sell it. Well, would you look at this? I can get paid $233 for trying to sell my shares at $40. And right now, it's at 27. And the return that you're making on that is crazy. You can even on Marathon Digital go out $45 strike, and you're still getting paid $183 for trying to sell your shares this far out. That is a fantastic return. Now, if you wanted to get out of your shares quicker, you can sell it at the money. So you can say, okay, in a month's time, I will sell my shares at the price they're at right now. You would get paid $495 to do that. You can get paid $495 for a month to try and sell your shares at the price it is right now. So you could have bought them back when it was 15, and now you decided, okay, I want to sell them here. Well, why not get paid to try and sell them here? That's the beauty of this. If you try and sell this covered call, and let's say you're not forced to sell it because the price is below the price that you've selected at the expiration date, what does that mean? Okay, you get to keep the full $500 in your pocket. You keep that and you keep your shares. So it's a win-win situation. I want you to think about it like this. If you sell that 28 call and the price doesn't end up over $28 at expiration, not only do you keep your shares, you now own them 17.8% cheaper than you would have if you didn't sell the call. You have significantly dropped your break even. So what does it actually look like when you're selling calls? This here is my tracker that I've got for my current marathon digital position. So what we can see is I was actually selling puts to get in, which we're going to go over in another video. All of my calls that I'm selling, look, I received $25 here, I received $12 profit on these ones. I'm basically massively dropping my break-even price on my shares. Simply just on these shares, on this 100 shares that I bought here, I actually bought them at 12.36 per share. However, my break-even price on the shares is 11.25. I have significantly dropped that break-even price from selling covered calls just on this load of shares. I have a lot of calls and sold puts here not accounted for in that break even, so it's actually significantly lower than this. However, this is simply just based on these 100 shares and all of the covered calls that I've sold and rolled. So back to the example we were talking about on Marathon Digital at 28 a share with your covered call, and you're getting paid, right now it's $500 you're getting paid to sell them at 28. So if it goes above 28 and then you decide, I don't want to have to sell my shares anymore, you can roll the position. You can actually roll this position and kick the can down the road and try and sell your shares at a higher price. If not, simply collect more premium and bring more premium through the door, more cash through the door on a monthly and weekly basis by rolling your position. We're going to go over that in another video. That's going to be another video in itself because rolling can be quite in depth and I think it requires an entire video to itself. So thank you guys for watching. Hope to see you around soon. Remember to check out the Discord community in the description. Follow the Twitter. Everything is posted there. As I said, all of my trades, everything is posted on our Discord community. We have a lot of free analysts in there with free channels, awesome swing traders, zero DTE, SPX traders, everything is in there and most of it is free. But if you want to see my specific trades, then you've got to sign up to be a member. Appreciate it guys, thank you.